Hi guys, today we're gonna learn about the difference between index funds and ETFs. So ETFs and index funds are very common yet very different. Okay, most of the people will say index funds and ETFs are same. Okay, but they are very different, and most of the people don't know what the difference is. Okay, so um So we're gonna learn today what is an ETF. So ETF is a combination of many stocks. So it follows a index generally. So index can be given by an index provider like NSE, BSE, Nasdaq, S&P. Okay. So example of ETF in the US is SPD, SPY, Spider. Okay, and QQQ is a Nasdaq ETF. So these are famous ETFs of US, and in India we have Nifty Bees uh, and many other ETFs. Okay, so they generally follow a index, but nowadays actively managed ETFs have also come. So ETFs are exchanged on the stock exchange. Okay, they have a unit and they can be exchanged on the stock exchange. Okay, so in case of index fund, so what is an index fund? Index fund is also a basket of stocks, and it generally follows a index. Okay, the index is provided by the same index providers, and so these are similar to an ETF, but they are not exchanged on exchange on the index. They are not traded on the stock exchange. So their units can be bought and sold by the AMC. Okay, so and we get it only at the end of the trading session, and combination composition of the index can be like Nasdaq has uh, the tech companies, and Nifty 50 has the top 50 companies of India. Okay, rebalancing happens on a quarterly basis or on yearly basis. So whatever the frequency is, the rebalancing happened at that time. And returns, they have similar returns, but sometimes the returns can vary between the index funds and the ETF. So whatever the underlying index returns are, the returns will be similar. Returns of the index funds or the ETF will be similar to that. Okay, if it's managed correctly. Tax difference. So this is the major difference between ETF and index funds. So the tax difference lies um, when index funds buy or sells stock. Okay, so this is like selling a stock. So anybody in the fund, okay, any investor in the fund, when they sell a stock, okay, so AMC has to also sell that stock and get that money and return it to the investor. Okay, so in this, the AMC is liable to pay the tax, and in turn, the existing investors has to pay the tax. Okay, so they have the tax burden. The investors ultimately have to bear the tax. Okay, if anybody sells index funds unit, so the investor has to bear the tax liability. But in case of ETF, it is a in-kind transaction. Okay, so if in-kind transaction is there, so they don't have to the existing investors don't have to pay the tax. If anybody sells or buys a stock, they have no tax liability. If they are holding it for like 10 years, they are not liable to pay any tax. They are liable to pay only that tax that are because of their buying or selling. So brokerage is there. AMC, when we buy an index fund, no brokerage is charged. Only sometimes the going in and going out may be chargeable, but generally no brokerage is charged on the index funds. But on the ETF, you have to give brokerage to the broker. Okay, so that's it, and thank you. And please like and subscribe and share my video, and please support it. And as you have supported it before, so please subscribe, like, and for many such videos and for gaining knowledge like this, please stay tuned, and thank you.